This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, welcome back to Invest Like a Pro. This is Joe Rabil. We're going to talk about the stock market as of Thursday's close for Friday morning. I'm going to go through the market conditions and then look at the S&P in multiple time frames. So we're coming into a pretty important area. We got to kind of decipher how important this is and how big of a turn we could potentially be making here. So let's go ahead and get into that. Now, first thing I want to mention is if you want to learn more about trend and momentum in multiple time frames, then I would suggest, and that's what I do on this channel. If you want to learn more about that, I would suggest getting the book. It's at a discount right now in a PDF format. If you go to rabilstockresearch.com/book, you will get information on that. I think it dovetails really nicely into my course, as well as if you take my research, my monthly, the monthly subscribers get my research, that a lot of that will play into some of the things that we talk about on this channel. We're going to start out by going through the market conditions, and then I want to go into the specifics of the different time frames. And there's something important that I want to cover today with respect to the 1, 2, 3 sequence. So let's go ahead and start with the sentiment. So the sentiment dropped. We definitely had a drop in the bulls. It went from 49 to 44 for the week. The difference between the two dropped down from 26 back down to 20. We're getting to the point. I still have it in the neutral camp, but you see how I moved it leaning left here. It's over. It's close. It's starting to switch over. I think if we can work this down into the teens, we have to start thinking it's such a big drop from where it was that we would put that in the positive camp, especially because we're already oversold. Look at what this is doing. We are getting a RSI 5 down. Right now it's at 30. I almost hope on Friday that we don't have a big up day, right? I'd love to see this stay under 30. Right? Because we have an RSI 20 that is above 50 right now. So it would be setting up a weekly RSI signal into price support, which I've been talking about around 4,200 to my subscribers. 42 to 4,300 is the fib retracement level. I'm going to get into that a little bit when we get into the trends and the momentum. But let's go ahead and keep going on this. So we've got this oversold reading and we're leaning a little bit more towards the bearish side. So this is getting close to providing some kind of a short-term buy signal. I was really hoping this was going to drop a little bit more into the teens and then I would have just gone ahead and moved it. But it's leaning there. It's close enough. I mean, right now, one of the things that's kind of jumping off the page here is this big jump in the volatility. Do you see how the volatilities went? So it tried to drop back down during this rally phase, and now it's increased again. So this is only on the daily chart, but it's just barely rising, but the moving average is rising, and the ATR, the average true range, is above the moving average. So I moved this into the negative camp. So that's a big deal, I think. What that tells me is that when we're looking at these for a potential rally, that it's probably more of a rally into resistance rather than a big bottoming pattern right now. Remember, for those of you who follow like the Trader's Almanac or something like that, I mean, it's very typically when you're down in August, down in September, you'd be looking for some kind of a reversal or bottom in October. So it would make more sense to me just looking at all that information plus what's taking place here is some kind of a rally that leads to maybe a little bit more weakness and then a down move. Now, what that might mean is we'll rally up a little bit on this and not actually give the RSI signal yet. Or we could come down and give a signal and just channel here, right? It doesn't necessarily have to lead to more weakness to the downside, although I am sort of expecting this 4,200 to be touched. That doesn't necessarily have to affect the RSI signal. And I'm not necessarily saying that the S&P would be a buy, but I would be, especially based on the fact that we're breaking the 18-week. But I just want to bring this up because it's not like we get a lot of these signals. We haven't had an oversold signal, RSI 5 oversold in a while, and we are leaning a little bit more to the bearish side. All right. So the other key to keep in mind is that we haven't really budged the volatility on the weekly. It remains positive. That has not changed. If we were to see this line even rising, even below this line, but rising, then I would start to feel like, okay, maybe we're starting to see a shift, but it's just not budging. So to think that we're ready for a big, huge move to the downside, look, I know it can happen. I just think it's not a high probability. All right. I think a higher probability is we come down, find support, and consolidate. Now, during the consolidation, if we have a lot of volatility and this turns up, then all of a sudden this starts to look more like a topping pattern. But I right now, it would be a total guess, especially being oversold and, again, leaning a little bit more to the bearish side. All right, let's move over to the trends. And what I've done this week is I've put I've overlaid the zigzag. All right, because I want to talk about something. When I get to the hourly, I want to explain something that's taking place. So look at what's happening here. If I draw in my trend line on the weekly, we're right at the trend line. All right. Now, we know hopefully people have been watching this channel. Anyone who's been watching this channel knows that what I've been thinking is that we should fill in some of this area, because when we crossed the 18-month, it was declining. We're working that off. We're almost at the end of the month. Friday is the end of the month. It would be setting up a potential pinch play here. Now the key is, can this hold above, right? And even if we have an inside month or something like that next month, hold above the support area around 4,200, hold the moving averages underneath, and start to see these turn back to the upside. Then all of a sudden, this starts to look a lot more bullish. So, but look at what's going on the weekly chart. And this is why this is so important. So we've got our trend line right here. All right. We've also got, let me just throw up the fib grid here. We have, it's really 4,200, 419. I didn't put this exact. I think this is off a little bit. Yeah, it's right. It's very close to 4,200 or 420 on the spider. Now, if I do the fib grid off the low, we can do that as well. And I like to do that sometimes just to run them both. It's the 38% retracement. If I could find that, the way it's overlaid, it should be, yeah, it's actually right around the same level. So you just kind of want to be aware of these things when you get multiple signs all in the same level. So this is the 318. It says 416. Again, I don't think I did that perfect, but the reality is right in this zone, look at what we've got in this zone right here. We've got the 3.8 from the whole move. We've got the 50% from the last leg. We've got the trend line. We've got the 40 week, which is the 200 day. All right. We've got a lot of things lining up. All right. I want to get rid of some of this stuff. It's just a little harder to see. So we know this is a critical level this horizontal line that I'm drawing right here. I think right in that zone, 419, 420, something like that. How we handle that, I think, will be incredibly important, because if we break down into that even a little bit, come down through, then it really weakens the potential for an up move having upside, right away. I don't think, based on what's going on in the MACD and the fact that the red crossed above the green, the sellers are a little bit stronger than the buyers right now for the first time in quite a while. I don't think that we're going to turn on a dime and take off, right? But we do know we're coming into support. We do know we're getting into that oversold territory. So it could turn into one of these deals where we make some kind of a double bottom like this. So these are the types of things that I'd be on the lookout for. Now, in the short term, as I said on Dave Keller's show yesterday, The Final Bar, I mean, to me, this has just gotten too far away. See how far away this is from the moving average? It ought to come back up. And we got a little bit of a rally taking place here, but what needs to happen is maybe this come up another day or two and this come down a few more days. And if there's not a lot of strength, like, that's not great volume. Right? That's not telling me anything. This is not all that exciting. If this just works its way back to the breakdown point and gets a little closer to the moving average, and we get some kind of maybe even a pinch play or something like that, then I would probably be watching it. Now, I'm going to be down on the hourly kind of deciphering that because I'm going to be looking for an ABC rally on the hourly. Now, why am I thinking that way? Well, this leg to the downside completed the 1, 2, 3 by coming down through here. It also, look at how much more emphatic the zero line reversal looks now on the MACD, and look at what the red DI has done to the ADX. You see how this has caused the ADX to cross above? Now, whenever I see this, now this is right out of my course, right? Whenever I see this, if we have strong ADX here and we get and that's based on the buyers, and we get the sellers to cause the ADX to cross above 25, then I'm not thinking about something quick. It's not quick. It's going to take time. It might be volatile. It might test your, how convicted you are about this, because it might be a decent looking rally, but the odds are against this turning on a dime and taking off. What's higher probability is some kind of a retracement and test of this low, maybe even potentially an undercut of this bottom and come down and test the bigger support level. But what we want to do now is focus in on the hourly and be on the lookout. So we've done the trend line break. Now, I want to distinguish something that I think is really important. So this was the last peak, and this is the reason why I have the zigzag up. So this was the last peak according to the zigzag, not this. All right, I would stick with the zigzag. I think this is going to give you better information, better feedback. I think this is going to be a more useful way of looking at trend reversals and all. And it's going to be the same every time because you're using the same. It's got to, in other words, this is automated. It's not your eye. It's not your opinion. These reversals are all based on math, and you want to have that as much as possible. But if you notice, that was the last high. The rally up did not take out this high. Okay, so we have the 1 in a 1, 2, 3 change in trend, but we don't have a new high yet. Okay. That means that we could come down, and if this goes from a zig to a zag, right, we get the red to turn down, and then we turn back to the upside, we have not officially changed the trend, even though it's presumptive evidence of a change in trend. It's not true evidence. What would be true evidence is if this pushed all the way up and took out this high, all right, and then turned like that. Why? Because we'd be making our second higher high doing that. That's something important that you need to realize. Right now, we just could do an ABC that looks like a 1, 2, 3 reversal, but in reality, all it's doing is creating an opposing trend trigger, getting this back up to the zero line, getting this down into the lower ADX component, right, and getting a setup to the downside again. Now, I'm not saying that's what's going to happen. For all I know, this could pull back and take off like a rocket, all right? And if it does, then you're not getting short. But if you want to play this for a move to the upside, you'd be looking at the 2 here. I would not be waiting for confirmation. I would be recognizing that I'm taking more risk, and I'm going to go here and buy the next pullback. Buy the next pullback here and recognize that I'm taking risk because I'm doing this counter trend. Why am I doing that? Because if this is really strong, then you can play it and continue to play it to the upside. That's how you want to do it. If you don't want to miss a leg, I think it's a low probability play, but you could make a little bit of money coming back up, and then it'll probably fizzle out. Maybe you hit a target and then it'll kind of fizzle out. That's what I think is going to happen, but you never know, especially in the environment we're in with, all the geopolitics out there, all the Fed stuff. I mean, we're talking about a lot of information, new information coming out all the time. If you don't want to miss any legs, that's how you do it. You take a pullback here and look for a higher low, some kind of a reversal at the 18, and play that. And if you do that, the risk reward's good enough that if it rallies up, fizzles out, and comes back down, you might make a little bit of money or break even or something like that. I'm not recommending anything. This is just educational, but I'm just telling you, like, if you've got a lot of strength here and you still want to play it to the upside, then I would actually play it off the low here, and I'd probably have to go down to a smaller time frame to get in instead of waiting for this, because it's probably going to fizzle out. So I'd rather be a little bit more aggressive with my entry and see if I can make a little bit of money going in. So that's kind of how I'd read it. Now, I don't know that that's what's going to happen. For all I know, we just got a reverse divergence. And this is just going to come up a little bit more, and this is going to turn down without making a new high here, and have a reverse divergence sell signal at the 0 line, right? I mean, this is really strong selling. Okay, that's what this is showing too. Strong selling. A lot of time, red DI on the higher time frame will coincide with the ADX on the lower time frame. So we're coming into a key area. I'm not expecting a big decline, but I am expecting a better test. That's where I'd stand right now. We got to watch what's going on this hourly to get a better idea of our entry points. Now, if we get the pullback and the move up and you're looking for the short signal, we want to look for it anywhere near here and to the 18. So anywhere in that zone, if we get in here and this is rising, we don't have to come all the way to the 18. We could look for a sell signal if we got our ABC and we got it. If we get a trigger to the downside, you guys have taken my course, you know what the triggers are. All right, let me know if you have any questions. Thanks.